Hi, I'm Rocky Lalvani, the Profit Answer Man. I am a certified Profit First professional, and this is what we do. One of the things we do for our clients is to help them implement Profit First. I'm going to teach you everything that you need to know to implement Profit First in your business and how to get started, and some of the issues that we see with some of our clients and people who do implement it and how to overcome those. So, first, let's start with the new formula. Everyone is told by their accountant, CPA, or wherever else they learn about this that it's sales minus expenses equals profit. What happens is profit is a leftover. It's an afterthought. And this is why you struggle so much as a business owner. You have the wrong formula. Mike Michalowicz came up with the new formula, which is sales minus profit equals expenses. How many times have you told yourself you need to pay yourself first? You went into business to be profitable. Profit is not an event, it is a habit. We create a habit by changing the formula and implementing systems that allow us to take profit first all the time in cash, so we know that we're profitable and we know where our money is and what's going on. Just so you know, this is not an accounting system. This is actually a behavioral system that is designed the way business owners behave. It uses those behaviors to your advantage and helps you to ensure that not only are you profitable, you are paid and the IRS is paid. And we'll talk more about taxes because I know we all hate them. First of all, this whole system is based on a universal law. It's called Parkinson's Law. Parkinson's Law says you will use up all the money and time in your business. Every time you've got a project and a salesperson comes in, the first two questions are, what's your budget and what's your time frame? Whatever that budget and time frame are, that is what is going to be spent, and that's how much time is going to be taken. You constrain the budget and the time frame, and you will able to get more done in less time. I know that because business owners are very resourceful when they have to be. They figure out how to get things done, and I have faith that you can too. The reality is we spend too much money. Too often we throw money at our problems and we don't solve them. The whole purpose of the Profit First system is to make you more resourceful, to make you think twice, to change your focus on money in the business and not just throw money at every single problem that occurs. Now, the basis of this is 5 bank accounts. Yes, I know you have to open 5 bank accounts. Do not go to banks that charge you per bank account because we don't want needless fees. If they're not going to work with you, find another one. If you need a list, there's a link here where we give you a profit toolbox. As part of the toolbox, we'll send you banks in your area that will not charge you. Do you have to use bank accounts? Can you do it in your accounting software on Excel sheet? No, you must use the bank accounts. Why? Because no one's going to look at the spreadsheet. No one's going to look at the accounting software. It's never timely. You look at your bank balance, you get on your phone, on your computer, you probably check it multiple times a day. This is designed to work around that. So, the 5 bank accounts. First off is your income account. Your next account is your profit account because profit comes first. The next account is your pay account because you deserve to get paid and paid well. You took the risk. You put the time and effort in. Next is our tax account for your taxes and the business taxes. This is not sales tax. This is not payroll tax for your employees. This is your taxes on the business. And then the last account is your operating account. That's where you do all your spending from. Now, sometimes we have more accounts, but that's not for today. Today, we've got the 5 bank accounts. All your money goes into the income account. The really cool thing about this is every time I look at my income account, I know how much money has come in. I know how much is there. If you put it into one bank account like you normally do, you don't know how much came in, how much went out. It's very confusing, and you're not sure what's going on. This gives you total clarity of how much money came into your income account. Now, on a set schedule, we're going to take money from the income account and put it in the other four accounts. We'll talk about that in a minute. So the money comes into the income account, and then we move it to profit, we move it to your pay, and we move it to taxes, and we use to OPEX. This is a sample schedule of targets, what Mike put in the book to show you percentages. They're targets. This is not where you start. You start with where you are at today. So if you say I'm not profitable, I can't put money in profit, I haven't saved for taxes, fine. We'll put 1% in profit, 1% in taxes. We start small, and over time we'll build to this. So we pick a schedule to do this. Some businesses do it monthly. Some businesses do it twice a month. Mike recommends twice a month on the 10th and the 25th. Some businesses do it weekly. Please do not do this more than weekly. It becomes onerous and burdensome, and we don't want that for you. This is supposed to be easy. So you sit down, and based on the percentages you come up for your business, when the money comes into the main account, let's just say it's $10,000. Let's say we're starting out and we allocate 1% to profit. We'll put $100 in profit. Now your pay, what's your percentage of pay of your revenue? Maybe it's 20%. In that case, we would put $2,000 into your pay account. Work with your accountant to figure out your tax percentages, and you'll put, let's just say you're going to follow the book and do 15. You'll put the 1,500 into the tax account, and then the remainder goes into your operating account. Now you know how much you truly have to spend on the business. What happens when you run out of money in the operating account? Well, you got to go back and sell more, or you can steal from yourself. But at least you now know that you're spending your paycheck, you're spending your profit, and if you're spending the IRS's money, you know you're getting yourself in trouble. So don't do that. That's all there is to the system. You basically set up the percentages, you follow the allocations on a set basis, and you just do it. Now, once a quarter, I want you to increase your allocations to profit, to your pay. If you need to increase tax, you'll increase tax, and you'll cut your expenses. So this comes back to Parkinson's law. By cutting your expenses little by little and being more resourceful instead of throwing money at every single problem, you can figure out how to spend less in your business and how to be more successful with it. And that's basically all there is to it. Now, let's take a look at this and why this works so well. So here we've got a bowl of candy. All your money is in that bowl of candy, just like it is in your bank account. You see a whole bunch of candy, what do? You reach in, you grab some, you eat it, and that's the problem. But look at what happens when we take all that money and we split it out to different accounts. Now, when you look at the candy, you have clarity. You know what money is for your pay. You know what money is for your profit. You know what's for taxes. And now you can see what you actually have to spend and what is there for you. And this is really what it's all about, this clarity to see it just like this and know what is going on. So, over time, your accounts will build up and they will have excess. Just because you allocate money to pay, profit, and tax does not mean that you need to spend it all. Your pay, you might want to build up a little extra so that if you hit a tough time, you've got extra money in the company to pay yourself. In the book, Mike recommends that every quarter you take a profit distribution. You take half of the money in your profit account and you distribute it to yourself. And then this allows your profit account to build up over time as a reserve account. Again, we're removing profit from the company. What do we do with it? Well, A, we could go have fun. There's nothing wrong with that. You work hard, you deserve it. B, we can pay down debt, right? So if you've got a lot of debt, profit is a great way to pay down debt. Some people use it for tithing to whatever they have in their religious beliefs. That's wonderful too. Or you could invest it in another business and grow another stream of income. That's the one I love best. Maybe you're going to buy the building that your business is in, invest in real estate. Over time, that is what you are going to be able to do. So that's all there is to the system. As I said, it is pretty simple and easy to do. For some reason, doing simple is hard for everyone. They just won't set up the bank accounts. They won't follow the rhythm. And then 3-6 months from now, they're in the same place. Whereas when my clients do this, if they follow it religiously, they have this uncanny habit of telling me at about 18 months, I've never had so much money in the business. This is amazing. What are we going to do with it all? Of course, we talk about taking it out and using it wisely, not just spending more in the business. So that is pretty much it. Now, if you want to learn more about this, I teach everything I do on the Profit Answer Man podcast. We go into much more depth. I go through every single chapter in the book. Check it out. If you want, you can sign up for the free tools. We'll give you things, including 2 free chapters of the book to help you get started. As always, if you got a question, post it in the comments. We're happy to help you. Thank you for listening. We look forward to hearing from you.